So good evening friends, this side 27th December. So today is 27th December 2019. Practically 2 a.m. in the morning when we are shooting our video about our outlook on Indian economy 2020. But before shooting the outlook, I would like to congratulate Jagdish Khattar ji, ex-managing director Maruti Udyog Limited, for joining an elite league in India. So basically India is having multiple elite leagues. One elite league is formed by the people, those who are doing the hard work. They achieved a lot of ranks and honors like army, military, cricketers, the sports people, the basically the students, those who are winning a lot of awards, the inventions, the innovations, and lot of these elite league. Second elite league is created whereby I really doubt I can ever be participate in this elite league, but I congratulate Jagdish Khattar ji for joining this elite league. This league includes Nirav Modi, Lalit Modi, Chanda Kochar, Rana Kapoor, Shikha Sharma, now the Karvi, the Singh brothers of Ranbaxy. But Jagdish Khattar ji disappointed me a lot. I was expecting him to do something great. I failed to understand that the only person who able to reach closer to the record made by Nirav Modi is Rana Kapoor. But none other than Rana Kapoor is even able to reach closer to the record made by the Nirav Modi. So here Jagdish Khattar ji made me very, very disappointed. What I was expecting from Jagdish Khattar ji is that he will do something that even Nirav Modi and Choksi sitting in UK and some other countries feel that we have competition in India. So there is an article that came, and that article is in the newspaper dated 25th December. It means one day before. This article means Jagdish Khattar, CBI books ex Maruti managing director in 110 crores fraud. Central Bureau of Investigation has registered a criminal case against Jagdish Khattar, the former managing director of Maruti Udyog Limited and his Carnation Auto India Limited, for allegedly selling the assets pledged with Punjab National Bank against a loan, thereby causing a diversion of not less than 110 crores. Khattar started his own company Carnation Auto after leaving the automobile major in 2007. During the investigation, the Central Agency (CBI) found that Khattar and his company had dishonestly and fraudulently sold the fixed asset worth 66.9 crores for roughly 45.6 crores without the approval of the bank, whereas the assets were furnished as security. Further, after the sale, the borrower did not deposit the sale proceeds with the bank to the CBI said. Explaining the modus operandi, the CBI said Carnation took a loan of 170 crores from Punjab National Bank in 2009, which had turned non-performing asset in 2015. I always feel amazed that what I did in my life. Throughout my life, I always follow the principle of honesty, integrity, the client service, making YouTube videos, free knowledge, absolute, the now selling derivatives on Amazon, now treasury consulting on Monday, filing for bank license to Singapore. I never thought that if I would take the training from this Jagdish Khattar, I would be a millionaire today. Trust me. This is the biggest mistake of my life, that I had not taken a training from Rana Kapoor, Jagdish Khattar, else I would be a millionaire today. So the modus operandi, they took a loan of 170 crores in 2009, which turned out to be the non-performing in 2015. The bank had conducted a forensic audit through a company, KG Somani and Company, any maybe C or non-CA firm, I don't know, so no personal indemnification. According to the audit report, the accused borrower has not sold the securities pledged with the bank but dishonestly and fraudulently extended loans and advances to his sister concerns and two, thereby committed misappropriation of fund and put them for the personal use. That's excellent. Rana Kapoor, Chanda Kochar, Shikha Sharma, Nirav Modi, Choksi, Jagdish Khattar, Singh brothers of Ranbaxy. This is excellent. So my heartiest congratulations to Jagdish Khattar ji. But I request the next Jagdish Khattar to please break the record of Nirav Modi. I am waiting for that. My second congratulations is to a company to whom I am always saying in losses, but finally they admit. So there are three stories pertaining to startups we have, although we have number of stories pertaining to startup. There is no doubt about that. So first story pertaining to startup is that SoftBank is clearly on the verge of mess. We know and we already explained. We don't want to explain more. Since our whole country is busy in citizenship issues, NRC, and now NPR, National Population Register, we not focused on how the Goldman created the credit line for WeWork, whereby the actual credit and the FX risk is not on the WeWork, rather it is on the SoftBank. Because our media, this paper, they themselves do not know how the credit line works. You don't trust me? Never trust me. Open any Indian newspaper and show me a paragraph that how the credit line created by the Goldman, is actually working. And more importantly, any CFA, certified financial analyst, give me one page of CFA documentation whereby they proved me that CFA is teaching how actually credit line by banks are actually devised, how it actually works. By the way, there is another news which we have today, which is that Quicker cuts 500 to 600 jobs after being hit by internal employee scam. Oops. Government is selling public limited companies. Private companies are in mess, we know. Diwan Housing, ILFS, Carvey, Religare, the list is very long. The only thing which left, two things left in India, the two pillars. One is the IT, which is dumpling. Infosys is firing 15,000 people, Cognizant firing 12,000 people, and another 350 plus people of Cognizant is on the chopping radar. And I'm not saying that. Check on Google. More importantly, under all this mess, a Tata mess created and cyber mystery will taking over that. We're going to have separate video on Tata. We're going to give our judgment on Tata, so we're not talking much. But one thing which we want to discuss in this video is to discuss about the legacy spots. If you get some time, just read it about when Mystery left. He wrote a letter to the board wherein he mentioned about a phrase or a word which is legacy spots. So just read it if you get some time. And second good news which came is that Malvinder arrested in case of fraud misappropriation. Former Fortis healthcare promoter Malvinder Singh was arrested on Tuesday in another case related to the alleged misappropriation of funds at Religare Fininvest Limited, the police said. They are our leaders, don't forget that. Chanda Kochar is our leader. Vijay Shekhar Sharma is our leader. Rana Kapoor is our leader. Shikha Sharma is our leader. Malvinder Singh is our leader. Quicker is our leader. And don't forget Bhavesh Agarwal and Ritesh Agarwal. Oyo is about to ask around 2,000 plus people to quit. By first quarter 2019, the unconfirmed source, or basically those who not coming in public domain, they said that it's not first quarter, rather by end of January. Oyo. Ritesh Agarwal on one side claimed to be a $10 billion company, another side he is asking around 2000 plus people to go. Note this very carefully. So the second pillar of India, which is startup story, is shaking. But the story has not yet ended here. The story is Food Panda losses widened to 756 crores. Let me read. Food Panda, owned by Ola, posted a wider loss of 756.42 crores. On a flat note, I take it 756 crores. Compared to the loss of 228 crores in financial year 2018. So financial year 2018, you posted 228 crores loss, and this time you posted a loss of 756 crores. Approximately 3.5 times. On the contrary, the revenue you generated is only 82 crores. So on a 82 crore loss or revenue, you lost around 756 crores, which means approximately on 1 rupee of income, you are losing not less than 8 rupees. And don't forget, Food Panda is company by Ola. I sometimes think that Treasury Consulting, after doing such hard work, 2 a.m. in the morning, and I'm shooting a video for you people. We just closing our Singapore financials for the very first year, and we are declaring the net profit of 25%, and they are in losses. Still, the paid and bloody sold media and the valuation expert and also the Institute of Chartered Accountant of India, the company secretary, and all those who promote the valuation standard, and of course the International Valuation Institute, cannot have any indemnification that these loss-making companies are valued in billions. On per rupee of revenue, you are losing not less than 8 rupee on a per rupee of revenue, you are losing 8 rupees. That is a business. Somebody asked me, why don't you make an outlook on India? I was supposed to make an outlook of India. My outlook of India for you might be a scary, but that is a reality. Because I'm not Arnab Goswami. I'm not Aaj Tak. I'm neither India News, who will always talk Hindu Muslim, who always talk the Mandir Masjid. Now they talk about the citizenship bill. I talk about the real issues. I'm talking about an economy wherein the ex-managing director of one company took a loan of 170 crore and it became non-performing within 6 years, and he did misappropriation of funds. I'm talking about a startup story wherein Food Panda, Swiggy, Zomato, everybody is firing. I'm talking about an economy wherein startups are bleeding and losing heavily. They're not losing 1 crore, 2 crore. Yesterday, there is a company called, I think, Home Lane, something like that. I take an indemnification if I mistakenly said a wrong name. Basically, it's an interior designing company, those who did interior designing of the home. In fact, they also reported heavy loss on their revenue. Even interior designing company cannot be in profit in this country. And day before yesterday, I heard that ice cream maker in Nagpur, it's being sold to Bain Capital. I don't think I need to explain who is Bain Capital. They're being sold to a Bain Capital, and this is the second time. So in 2007, an ice cream maker in Ahmedabad was sold to a South Korean based confectionery player. And now this is the second time within 1 year, another ice cream maker sold in Nagpur. And you would be surprised to know that that ice cream maker generated a revenue of 580 crores in the last year. 580 crores, if I say that I have a company who is on a revenue size of 580 crores, everyone will make sense that at least they would make for 10% profit. You would be surprised to know they reported 2 crores loss. On a 580 crores of of top line, you are reporting 2 crores of loss. So I'm talking about an economy whereby the government do not have the cash, whereby Reserve Bank of India is actually doing operation twist, reverse operation twist, and the media is saying it's an operation twist. We're going to explain this in our next video when we make it. I am talking about an economy whereby Quicker, Swiggy, Ola and everybody is firing. And now I am talking about an economy where this elite league in which we have Chanda Kochar, Rana Kapoor and everything, this elite list is growing. This is my outlook about India. I know that there would be many people who would press this button on YouTube, but who cares? Who cares? On Monday, we are filing for bank license for Singapore. Do I care about these people? Go to hell. Treasury Consulting is filing for the bank license in Singapore on Monday. Treasury Consulting is selling derivative contracts on Amazon. Treasury Consulting is about to start operations on Lazada. And Treasury Consulting is launching derivative exchange and whatnot. Who cares about this? No one cares. But the actual story starts from here. I have selected 10 topics to talk about Indian economy, my judgment about Indian economy, which includes the foreign portfolio investment of 1 trillion rupee, the gross GST collections, the Tata Group legacy spots, the Sensex valuation nearly which is 20 years high. Another is Reserve Bank of India operation twist, and then is DLF joint hand with the sovereign wealth fund, private equity and VC funding double, but there is another thing which we're going to add, that improve GDP else face the credit risk, Standard & Poor and RBI treasury bonds. So I go one by one. A lot of people ask me, why do you need business newspaper in a day? I'm not asking any sympathy from you, neither I need any sympathy in my life. But see the cuttings. I keep every cuttings of the newspaper which I think even if it may help me 10 years down the line. If you read one business newspaper in a day, I'm telling you, you get the knowledge which no book can give you. In fact, Bloomberg cannot give you, you will get that level of knowledge. So start having a habit of reading one business newspaper in a day. That's very much essential. Okay, on paper, it is being said that foreign portfolio investors, FPI, got net inflow to tantamount to 1 trillion rupees, which is roughly 1 lakh crores, highest in 6 years. Okay. Now I would like to read something and then I'll give my judgment on that, as this is our first topic. So ignoring negative sentiment around falling GDP growth and the same policy roadblocks, the foreign portfolio investors seem to have flocked to Indian capital market in a big way, and the net inflow of around 1.3 trillion rupee versus 97,000, which includes 97,250 in equities and so. By the way, the editor of that newspaper do not know that Indian rupee is still a carry currency. And more importantly, as the negative interest rate parity growing worldwide, because Australian dollar is one step away from quantitative easing. And we all know that now on the carry front there are only 3 currencies. One is the Sing dollar, Philippines peso and Indian rupee. By the way, I'm sure that 99% of the people, those who are watching this video, they do not know how Philippines peso react, how Philippines peso worked. But Philippines peso is a very strong carry currency case, and thank you to the government of Philippines, to be honest. Since Indian rupee is turning out to be a carry currency, because of the matter of fact is that other currencies are moving into the negative interest rate policy, henceforth this one so-called 1.3 trillion dollar of flow is bound to happen. But having said that, this 1.3 trillion dollar flow which is coming to India is having a deep interpretation issue compared to the earlier flows we used to have. In earlier carry trade related flows, the majority of the money used to invest in the benchmark curves. and the treasury curves. Now the benchmark, the treasury curves includes your government of India securities, treasury bill, treasury notes, treasury bonds and respective. While the benchmark curve includes treasury and non-treasury. But this time, this is not a good news, rather it's a bad news. The bad news is that out of 1.3 trillion, around 0.97, roughly 0.98 trillion is invested in equities, which is a cause of concern. Which for me is that foreign portfolio investors are not interested to invest in treasury and the benchmark curves of India. And that's a concern. But I know no one who read these kind of articles use their mind in that direction because they don't know. Neither they wanted to know. That's a big thing of the life. Our second topic is the gross GST collection. I don't think I need to tell you anything about the GST, but because on our TikTok channel we already shooted a lot of videos about GST. In goods and service tax, there is a big issue. The revenue collection is falling, and in the next 4 months, which is December, January, February, March, for this fiscal year, the government needs to collect at least over a trillion rupee every month. Considering economy is facing structural issue, the collapses are happening, the frauds are happening, government is far ahead, far before than the disinvestment target. Majority of the so-called firms do not invest in the capex. I have a data to support this. The data is this. You can see that. Now this data suggests that Reserve Bank of India wants banks to resume lending to large industries instead of restricting themselves to the lower risk retail sector. In this report on the trend and the progress of the banking in India, released on Tuesday, the central bank said bank needs to start lending to industries in order to stimulate the capex and the investment cycle. Wait. We already having non-performing asset of over 13 trillion INR, which Reserve Bank himself saying. And majority of this non-performing asset is because of the big corporates. How can you even say that banks needs to lend to big corporates? How can you put a gun on the bank heads for the big corporates? Do you want another rally? Do you want this 13 trillion INR to go up to 26 or maybe 39? We are actually living in an economy when RBI is saying two different things at the same point of time and you are confused. Like they said that central bank also raised the issue of corporate governance practices in banks and another financial institution. Without naming them, it said recent governance related failure in some financial entities have highlighted the impact of the quality of the corporate governance X, Y, Z and all. Excuse me. And another wrong thing which they said is that the private banks and the foreign banks remain well capitalized and above the regulatory minimum of 10.875% of risk weighted asset. How can you even say that? RBI himself said that State Bank of India, Punjab National Bank and every bank including Yes Bank, they are underreporting the non-performing asset. And how can I trust RBI whether this the amount which Reserve Bank is giving is actually the right amount or not? And how can I even agree to the fact that the underreporting of the non-performing asset and the provisioning? By the way, I'm sure many of you do not even know that underreporting of non-performing asset and the provisioning are the two different things. How can I even assume that this underreporting of both non-performing asset and provisioning was not happening? It is only happening this time. Then how can you give a report in the public domain and saying that it is well capitalized? We are actually living in an economy when our central banks are giving multiple figures at the same point of time, and even people like us, those who read one business newspaper in a day, rather two business newspaper in a day, they feel they make us confused so that you cannot make any interpretation. But they forget it that there are people in the market, those who have capability of interpretations. In this article, there are 5 different interpretations, and I'm damn sure before publishing this article, the author not even thought about it. Now, this would have a direct impact on the GST, because GST is ultimately an indirect tax. If the economy is falling, then the direct tax and indirect collection tax will definitely get down. In fact, I was reading one of the newspapers, I got to know that direct tax collection fall by not less than 5%. And I doubt whether the authenticity of that 5% is correct or not, because I do not know. So ultimately, the moral of the story is very clear and precise, which is that the tax collections in India is falling. But the pressure, the target which government has set for disinvestment and also for GST collection is very steep. And I really doubt whether government would be able to raise this target or not. I don't know, but the chances are very slim. Like if I look at the number which I got it from here, I got to know that the GST collection in April is 113 crores. 1,13,000 crores. While in May it 1 lakh crores, in June 99, July 102, then August 98, September 91, October 95, then how come in November everything turned up to 103? And for a minute I assumed that it's being the festival season. How can I even assume that for the next 4 months you would be able to reach the target? That's very tough. So on GST collection also, at least myself is not bullish. If somebody else bullish, I don't know. Now here comes the most important and the most heating topic which we have, which is the Tata Group topic. And I'm not here discussing whether NCLT, National Company Law Appellate Tribunal, said it rightly or wrong. We're going to have separate video in that regards. But one important thing which we want to discuss is the legacy hotspots. So before leaving Tata, Mistry wrote a letter about a legacy hotspots. So it said that in his letter to the directors of the Tata Sons board and the Tata Trust trustees soon after he was removed, Mistry had pointed out the several legacy hotspots that were pulling down the group overall finances. I don't know you trust or not, but Tata Group is definitely not in the right shape. The only company who contributes in case of Tata heavily is the Tata Consultancy Services. If we keep Tata Consultancy Services apart, then things are very different. Like example, I know many people don't like, let's talk about Virat Kohli, right? If you keep the test wins Virat Kohli did in India apart and take his test wins and losses outside India, you would get to know where exactly he stands. Did you ever know that Virat Kohli loves playing against Sri Lanka? Rest you know. Now you are again inviting Sri Lanka, or you are going to Sri Lanka for winning. This is known as the count of trophies. Similarly, in case of Tata Group, you have Tata Consultancy Services, which gives the major revenue and the dividends. If you keep Tata Consultancy Services, TCS separate, then it would be an end of show. Having said that, just look at that, few things. Tata Teleservices was the big hole in the Tata Group and Tata Group financials, pointing out by Mistry. Since Mistry exit, the Tata Services has lost 60,000 crores with the group holding company paying its dues to bank and government. 60,000 crores. For example, Tata Power net profit increased from 168 crores in the fiscal year 15 to 2190 crore in fiscal year 19. It looks very rosy, but the thing started here. But the earnings are once again contracting. Its net profit was down 73% on year-to-year basis in the first half of current fiscal, and the interest liabilities went up 11%. The company Mundra unit, the biggest source of loss, reported a net loss of 1653 versus on a revenue of 7064 crores. Mistry was not wrong. I don't know, and we're going to have separate video about our interpretation on that judgment, but practically speaking, Mistry raised a very serious issue, and this issue was not incorrect according to me. According to Mistry, he rightly pointed out that Tata Group is having various legacy spots, and these legacy spots are consuming a lot of bandwidth of Tata. And because of this, Tata Group debt is growing at a very exorbitant pace. The chorus, majority of the M&A deals done by Tata is currently on the verge of closure, like Corex, Jaguar, and all. All these. So on that front also, I'm not very optimist. Rather, I would say the more or less the situation is same for Reliance also. Reliance debt is growing at a much faster pace. Adani debts are growing at a much faster pace, and unfortunately, rather than pointing on this part, the media is more focusing on their valuation part. Another thing is the Sensex valuation, the fourth point. Now look at this. It's also a joke. It says that at the time when the benchmark indices are scaling peak highs, the gap between underlying corporate earnings and the share prices have widened to multi-year high. The Sensex is on the course of ending calendar year 2019 at the price to earning ratio of 29x. So in this calendar year, which is 1st January to 31st December, the price to earning ratio of 29x, the highest in 25 years. However, having said that, the corporate earnings are on the way towards this. So India is the only country in the world when the corporate earnings are going down while the valuation will go up. Let me give you a number. The price to earning multiple is 29x. I don't know why people don't report PEG, price to earning growth. I think either they don't know the formula or they don't want to do, because PEG give a realistic figure. Anyways, current valuation are however low. The Sensex, okay, the benchmark has ended calendar year 2018 at a EPS, earning per share of 1527. Now it has declined to 1425. Sensex valuation is 25 years high, but EPS of Sensex is falling. This can only happen in a country, India. But I know that Junjunwala and all those people, those who come on the CNBC every morning, they don't talk about that. Rather, they love to talk about the valuation, because they know the anchor who is also talking it about, who is asking question, he himself do not know the formula of EPS. So there is no need to talk it about. Next come the operation twist, which unfortunately our media do not know. It is not operation twist, rather it is a reverse operation twist, which means that the securities which you are buying is of near tenor while the selling is of the long tenor. The sell amount is lower than the bought amount. It is not operation twist, rather it is a reverse twist. But RBI governor failed to understand that copying a word from the US financial system, which they did in 2008 by Federal Reserve, is not the rightest stuff. What RBI actually doing is a reverse operation twist, and the so-called paid media who is giving that this would have positive implication on India, they do not know it would have the deepest negative implication on India. The operation twist which Indian government is actually doing, the operation twist which Indian government wanted to do, this would have negative implications on Indian benchmark curve. And of course we have a detailed video on that, but because of this it would have a huge implications on Indian benchmark curve, and eventually from mutual funds to non-mutual funds everybody is bound to lose. That's for sure. Another thing which we wanted to talk, the next point is the DLF. Now it's a very interesting thing, let me read for you. Actually it involved two things. Let me read first the rosy picture and then the non-rosy picture. DLF, India's largest real estate developer, plans to strengthen its portfolio of rental assets with its partners Singapore Sovereign Wealth Fund. Oops. Singapore Sovereign Wealth Fund? How come it came into the picture? I'm not getting how come it came into the picture. Let's take a hold and take a break here. I have something for you. Mumbai-based property developer Hiranandani If you do not know Hiranandani, when you are moving towards airport and once you are actually inside airport, once you take the right turn on the flyover towards the airport, you know, you will look at your left, you will get JW Marriott, and just very next you will get a big name Hiranandani. Mumbai-based property developer Hiranandani has signed a pact to form a joint venture with US-based private equity firm Blackstone to develop industrial and logistic warehouses. With this, Blackstone is officially entering into the logistics and the warehouses business in India. Guys, do you know that Blackstone asset under management in India is now over $12 billion? And according to multiple statistics available in the public domain, this will cross not less than $13 billion by the time December 2029 ends officially. Guys, do you know that if Blackstone, who was merely having any presence few years ago, standalone private equity basis is having an AUM of roughly $13 billion. If I take $1 to 70 rupees, this is not less than 91,000 crores. Blackstone asset under management in India is, I think, equals to the asset under management of a mutual fund in India. It is said that there are 44 mutual funds we have in India. If you keep the Blackstone asset under management at one place, then it would be equals to the several asset management companies in India. Or maybe it's equals to a very big AMC in India. And remember, Blackstone is not the only player in India. You have KKR, you have GIC, you have Brookfield, and you have BlackRock. I do not maintain data of these companies, and it is very difficult to get the data on these companies. But if you get some time and data, and I wait for that time, that the private equity players in India are having the very luckiest time. If you add the AUM of Blackstone, BlackRock, GIC, KKR, and Brookfield, to all these 5 big boys, although having said that, there are other big boys also. Time is limited, it's already over 40 minutes video. There are another big boys. If I add only these 5, then together they would have the AUM of top 3 or 4 AMCs in India. We are actually living in a system when the private equity players are buying the strategic assets of India, just like I buy t-shirts in Singapore. Only one private equity player holds not less than 91,000 crores of asset under management. 91,000 crores. Only one. And it is growing. Now if I link this with this DLF, then DLF, and guys, do you know that majority of the inbound deals which is happening in India, which is merger and acquisitions and other investment deals, majority of the inbound deals are pertaining to the real estate investment trusts in India. This is another red flag, but I am sure that majority of the regulators are sleeping, and you know for what reasons they do not point it out. Here is another red flag which I am going to read it, which is that earlier this year DLF promoters had infused around 2250 crores in the company. 2250 crore in the company, which is the last tranche of the planned 11,250 crores. And then we saying that India is shining. Promoters are coming in the DLF and infusing the money. And today we got to know that the Lodha Group, who is supposed to pay around $325 million in March 2020, which is practically 3 months from now, is looking to raise money outside India, because India is already having liquidity crisis, is looking for raising money outside India so that they able to meet the debt obligation in March. And guys, do you know that Lodha is having around 19,000 crores of loan in the books, 19, and out of which 17,000 crores is only pertaining to the domestic business. So all the big boys, Piramal, Lodha and all big boys reach to a level that when either you need to close your business or you need a private equity player to come and help you out. Because in either case, if private equity player do not come and help you out, then you are absolutely gone. You are realistically gone because you do not have the money. But we don't discuss such kind of thing on the media channels, because media channel is simply that you need to save our reputation, because 99% of the people do not read business newspaper in a day. They don't think the way we think. They think whatever this CNBC, ET Now, Arnab Goswami, Aaj Tak and all these things, it's a righteous fact. There is nothing wrong in that. Now let's move the next. Private equity and the venture capitalist funding is doubles to 4.8 billion in November. But I am not going to talk about that. I am going to talking about that majority of these funds is actually coming from real estate and the big names like Paytm and all. And today we got another news, by the way, which is that the startup funding in India is actually got a growth of 2% on year-to-year basis. So the last year the startups fund, the venture capitalists fund around 8.7 billion and this time they fund around 8.9, so only 2% growth. And number of deals also fallen, by the way. So not a single thing which is coming conducive to India. Not a single thing which is coming conducive to India. Now here comes the big news. Our next. Standard & Poor rating on Thursday, which is on 12th December, by the way. Standard & Poor global ratings on 12th December forecast India GDP at 5.1%. I definitely feel that Geeta Gopinath needs a training, or either she is a paid person in IMF. The way she speaks confirms me that she do not understand anything and it is a matter of chance she end up on International Monetary Fund board. Just like Raghuram Rajan being appointed as a governor of Reserve Bank of India. Throughout his 3 years as a governor, he did nothing. And now he is giving gyan almost every day. And no technical knowledge, by the way. Here, Standard & Poor clearly said that if you do not improve the GDP, then we are going to cut the ratings for India. And by the way, Indian rating is not AAA, it is BBB minus. So one notch downgrade, India would be at C. And once India would be at C, it means you are one level above from default. Currently, you are 2 levels away from default. And by the way, Moody's have already downgraded India ratings to negative. India rating is BBB minus from all three, and that is a major cause of concern for India, because in the last several years, no politics, either it's a BJP or Congress or whatever government, no government did concrete action about Indian credit rating. It was definitely not on the radar, and in fact, it was never been on the election manifesto of any party. And more importantly, it never being on the discussion point of Indian media that why India credit rating is not upgrading to BBB minus to BBB, then slowly A, then AA, then AAA. Rather, after this economic slump, the rating agencies got the opportunity to make it downgrade. How long India would be able to save that? It's a big question. And in fact, the brokerage houses in India, have clearly said that India will not be growing more than 5% in 2020. And I really think that if current situation will continue, 5% is on optimist side. Now the main thing, which is Reserve Bank of India. Hey guys, do you know that Reserve Bank is changing the FX assets architecture of our country? By the way, do you know that whenever any media report mention about FX reserves, do you know that it is a wrong thing? It is not FX reserve. They should have mentioned NIIP, Net International Investment Position. NIIP. Don't trust me. Open Google and type net international investment position. You got your answer. Before talking about that, I would like to ask one simple question. Guys, if you're earning 1 lakh rupees in a month or $100 in a month, $1 million in a month, is your savings is also 1 million? So you make 1 million, your saving is also 1 million, or you have some expenses also. Similarly, if a country earns, country have some assets, country have some liabilities also. So FX reserves is never be the right thing to explain. It is just like the company will say, I have a top line of $1 billion, just like SoftBank is befooling people that you have a top line of so many billion, but what about the loss? It is net international investment position, which is a difference between FX reserves and FX liabilities. And by the way, the so-called Raghuram Rajan, since Raghuram Rajan, it is negative $200 billion and it is growing. In fact, why Raghuram Rajan? It is Mr. Y.Y. Reddy also. After Y.Y. Reddy, Subbarao, Raghuram Rajan, Urjit Patel, and now the great gentleman, it's negative. But media talks about FX reserves. Media do not have any time to talk apart from FX reserves. Because we give one side of the coin. We never give two sides of the coin. That's the problem. If you read that in September, the year that saw the global financial, September 2008, the year saw the global financial crisis unfold, deposit with another central banks formed 57% of the RBI FX reserves. So RBI used to place 57% of the FX reserves to the central banks. US Treasury bonds and another securities contribute less than 40%. But, surprise, fast forward to September this year, the share of foreign securities, which includes US government bonds, surged to 63%. And see this one side of the coin, that during this period, the India's central bank has increased its FX reserve by 51%. To a record, during this 11-year period, the Indian foreign exchange reserve grew 51% from 433 billion to a record $434 billion. Wait, if it is 11 years, my reserves grew by 51%, my liabilities also grew. Why don't you tell me this? I would like to give you one homework if you wanted to learn anything. The homework is that how a central bank managed NIIP, which is negative interest rate policy. Negative interest rate policy is very important because the good central banks of the globe, just like Monetary Authority of Singapore, Federal Reserve, European Central Bank, the intelligent central bankers of the globe, like People Bank of China, they managed NIIP. Rather, for China, I am absolutely incorrect because China never had NIIP. China always have NIIP surplus country. In fact, in Asia, China and Singapore are the two nations who are having NIIP surplus. In fact, I am mistaken here again that China is NIIP surplus country since many years. And when they were having the FX reserves of sovereign wealth fund reserve of around, which is CIC, Chinese Investment Corporation, to the tune of $3.5 trillion, which I think is currently 2 trillion, they were huge NIIP surplus. But this bloody media always talk about China negatively. And guys, do you know that where Tesla is investing? Where Tesla is investing? Where all the big car makers are investing? Who is the hub of electric manufacturing, electric vehicles in the globe? Where is who is competing with Singapore as far as the financial center status is concerned? It's China. But the media always paint the negative feature. And guys, do you know that Chinese companies are heavily investing in Indian startups? Do you know that? We're going to have a separate video. Whenever people paint negative figure about China, they should know that China is very strong. It is the media who paints the negative picture of China. Chinese big venture capitalists and private equity players are the heaviest investors. Guys, do you know In 2016, the total investment by the Chinese VC and PE is $460 million in 2016. $460 million. And today, year has not yet completely passed, but whatever number we have of this year, it is $3.9 billion. This is China. Forget their part. They invested $4 billion in India via their VC and PE fund, and the media always give the negative. Can I have one investment made by Indian VC outside India? By the way, Indian VCs have no money because they take money from investors. So the first question is, this question do not came because Indian VC have no money. And after SoftBank cracks become apparent every second day, Indian VCs are on the verge of collapse because from where they get the money. Can I have one question from RBI that how the immunization, I know many of you will not understand that, how the immunization of NIIP, your so-called Certified Financial Analyst, FRM, Faltu Risk Management and GARP, all these courses do not even taught you that what is NIIP. Forget the immunization of NIIP. You are moving from that deposit structure to the UST structure. From less than 40% to almost 63%. And you not explain that how the immunization is happening. Guys, do you know this would have a huge implication on the RBI balance sheet? By the way, do we know that RBI balance sheet is giving that picture? That's also a case. This is our vision of 2020 when we chose 10 different topics covering startups, covering credit rating, covering Tata case, covering open market operations by Reserve Bank, which they call operation twist, but actually it's a reverse operation twist, coming PE and VC funding and multiple, and GST collections and multiple. We feel that 2019-2020 would definitely not be a conducive year for India. No politics, BJP, Congress, leadership, citizenship bill and all. On a financial front, the government have to be on their toes. And I really don't think there is any uptick in 2020. Maybe it's a big miracle and that uptick would happen, but I have no guarantee because I don't have this magic wand, Alibaba. I don't have this magic wand, so which I take and I can see what's going to happen 5 years down the line. But currently the numbers which we have before us, it is only showing that Indian economy is contracting, and it is contracting at a much faster pace. We see that although majority of the Indian big industries are already winded up, just like Bhushan Steel, just like your now SR Steel, just like G, Subhash Chandra, Yes Bank and all, we feel that 5 big boys, Blackstone, BlackRock, KKR, Brookfield, and maybe Tencent, and maybe GIC. These 5-6 big boys control the maximum market in 2020. It would be very conducive year for private equity players. In fact, you would be surprised to know that India Bulls, who already sold their flagship building in Mumbai, they have already once again sold their projects, and in Delhi and Gurgaon, Delhi and Mumbai, if I'm not mistaken, taken indemnification to one of the private equity players. By the way, I have the cutting of this as well. I feel that collapse in India is imminent. No one can stop that until a very big miracle happens, and this big miracle changes that. I feel that since this collapse is imminent, Reserve Bank is practically forced to cut the repo rate because Reserve Bank left with no option. Because there are only 2 pillars for every economy. One is the fiscal front and one is the monetary front. Fiscal front things are very poor and it is almost outside the control of the government. To be honest, government is well below the disinvestment target, the GST collections, the direct tax and everything out of the control. On the contrary, when we talk about this monetary front, RBI repo rate is already 4.75 and it may drag down further to 4% in 2020. I might not be surprised. At the end of the day, we are definitely not optimist about 2020 for India, but we see that things would definitely go in a wronger shape. Having said that, lot of private equity players come in India, take up strategic positions, very careful on the job front. We are definitely not optimist. We are already 45 years high unemployment, and that is the old data. New data I do not have. On a regulatory front also, I don't think frauds would continue to happen. I am not very conducive for India, except one thing, which is that the startup ecosystem would continue to thrive. But having said that, it depends on two factors. If SoftBank will collapse in 2020, which I don't think, I think that the cracks, like I said in my outlook video, the cracks would be more apparent, but the collapse will happen in the cracks would be apparent, but cracks would happen in 2021, not in 20. But if SoftBank collapsed, then this would be the end of show for the startups. We already saw that how long the SoftBank will continue to fund Ola, who will fund the Food Panda on a revenue of 82 crores. You lost 767, 67, 70 crores. This is very important thing. We need to take this very seriously. We are not optimist, and definitely everyone will fire, banks, financial institution. We see a wave of consolidation. India will definitely not be decoupled from rest of the world. Donald Trump's election, Brexit would have deep impacts on India. India will definitely as always, never be a market maker, a market taker on the geopolitical issues as well. This is our outlook. With this, we thank you very much. You know our mobile number, which is +91 9899242978. Rest all details on our fixed income platform, www.fixedincome.global. 3 days from now, Friday, Saturday, Sunday, Monday, first thing in the morning, Treasury Consulting become one of the players who will file for the banking license in Singapore. Our less than 4-year-old company would be competent to file for a banking license in Singapore. Have a good time and talk soon.